Hey traders, Raghee here. Welcome to Charts and Coffee. Great to see everybody. Happy Tuesday, everyone. Happy Jerome Powell is testifying at 10 a.m. Eastern today, Tuesday. So just heads up, we've got Powell on the schedule, which means as we go into we've got the clearing period, right, from 9:30 to 10. And then as we go into the remainder of the morning session, it's going to be affected by that testimony to the Senate Banking Committee. So heads up. Now, here's what I will say, and let's go take a quick peek at the charts here. Here's what I will say. When we look at what we're dealing with in this candle, and I know it's kind of hard to see because it's a little doji there, but let's zoom into the 5. Take a look at what we're dealing with. You see what we're sort of levitating, right? We had that rally into the close. The Asian markets kept the highs steady. The European and UK opens actually pushed the market a little bit higher. And then as we went into the Asian close, we pushed a little higher still. So remember, we're playing in a global market. Even if you're playing equities are weighted in indices oftentimes, right? Not all of them, but we know the influence. So remember that if we're dealing with, this sort of risk appetite, this is good. This is good for not because the markets have to go straight up, but this is good because we have some clarity. I don't care if it's up or down, and I know most of you don't either. Just give us a direction and give us some follow through. And it's the follow through that's been so frustrating. That's why I've been talking so much since end of November, beginning of December, going back about 6 weeks now, that, hey, we're in chop on the daily time frames. And chop is distinctly different trading than when we're trading to higher highs and or lower lows. So this is likely to be a situation, you've heard of a relief rally before. Well, they really should call it a sigh of relief rally. And I think that's ultimately what Powell is going to do. Just give the market a little bit of a sigh of relief rally. No, we're not just going to tank. Let's be real. Look at where we are. We're chopping, but we're not, heading lower in a way that is a downtrend yet. The NASDAQ is probably as bearish as it looks, and even it is in a sideways market. And we just got the oversold cue from the stochastic. So, let's see what happens. All right. Having said all that, welcome, everybody. Good to see you all. The show, of course, is about your questions. So let's get to them. All right. Yep, we got Powell today. Exactly. Hashtag Powell. Exactly. Love it, Michael. It seems that Powell's speaking every day. Money does feel like that sometimes, doesn't it? Just shut up, right? Exactly. Just those chuckleheads to stay home. I'm with you. All right. First symbol up is gold. All right. So looking at GC now, we'll look at GLD in a moment, Michael. But when we're looking at GLD, it really is a GC futures conversation, and that means that we're dealing with a market that, look how long this has been in chop. Look how long we've been chopping and chopping and chopping. And so this is where, this is what we've been talking about in the free videos so very much. Where are my drawing tools? Let me grab those really quick. So what we want to do is remember that structure always precedes strategy, regardless of the strategy that you're using. Is it the right club for the shot, right? To use a golfing analogy, sideways market, that means we're going to use a slow stow. And now I need to see this market either give me a 50% retracement, because that's one of my favorite things to do in a range, or just trigger oversold or overbought. Okay, so that's really where we are now. This middle line, that's cutting the 80 and 20 in half, and being above that and testing the 50% can be, again, it's a little aggressive, but you can see we've already done this with a minor low on the 7th of January to the 10th of January. So I'm not looking at this as a trend. Please know choppy markets are notoriously difficult in the middle of the range, right? At the range extremes, they're probably some of the uh, crispest, narrowest, lowest risk type entries that we can find, because it's either support there, we'll give a little bit of variance for the historical volatility, but either work or don't. And it's a pretty nice way to be able to trade at the edges, right? Your advantage is at the edge. Your edge is at the edge in chop. So GLD is going to reflect that, Michael. So until I like GC, GLD is doing pretty much the same thing. So be really careful until we get to one or the other of the edge. Now, longer term, I'm bullish gold. Overall, I'm bullish gold. All right, next up, do rising rates cause the ITB to weaken? One would think, right, when you look at the ITB, and you know what, while we're talking about ITB, and let's throw in the related ETFs, XHB, XLRE, and even names like VNQ. Would rising rates cause these, especially home builders and construction, to move lower? You would think. You would think that that would be enough to send these into a downtrend, and yet we've known since easily summer of 2021, easily fall of 2021, easily the last month of the year, that rates are rising. Fed fund futures have been coming in from June to May to even March now. The Federal Reserve has been very open about their monetary policy shift, and yet ITB continues to defy gravity. So it's at an oversold level right now. So be careful. I'll give you this analogy. And when I was very young, it would have been about 9 or 10. My mom sent me to jiu-jitsu class, not the Brazilian jiu-jitsu we all know, but jiu-jitsu. And my sensei taught me then something that has served me very well outside of martial arts, which is, I'm going to show you this punch. I'm going to show you this series of movements, strikes and kicks and whatever. Never assume an anatomical response. Now, he used much easier words than that to 9-year-old me, but never assume that a correlation is always going to cause a certain movement in something else. Correlations are very tricky. We're always looking for causation. What would cause one thing to happen? I don't think ITB really gives, well, I won't say it doesn't care at all. It does, but I don't think it's really giving in to this rising rate environment. So I'm actually still relatively bullish, but at the edges of ITB, more along the lines of course, in a sideways market, testing the Darvis with an oversold stochastic. We really could look for some individual stocks within the ITB to be oversold or even pulling back. So yes to your answer, one would think, but please don't assume that anatomical response. Please don't assume the correlations, because sometimes they just don't happen that way, because there might be a different factor that's affecting that sector or stock. Hope that makes sense and helps. Costco for a daily chart long. So it just lost its trend. But remember, broken trend. So this is where, think about it this way. What do I always teach you all? In a double green environment, buy the dip, buy the dip, buy the dip. Dips are synonymous with a retracement. They're synonymous with a pullback. This dipped and kept right on going. Is this a downtrend? A dip is not a downtrend. So what we do is we transition from a trending market analysis to a choppy market analysis. Now we ask ourselves, where is this thing oversold, right? Where is this thing oversold? And then we'll use things like the Darvis. Notice how I'm not even worried about the stochastic yet. Don't let an indicator, a secret squiggle, dictate your trade. First start with the levels, and well, I should say first start with the structure, then the levels, and then see if an indicator, a secret squiggle, is confirming the zone. So I would say, starting with my V-score, which is a volume-derived tool, we're closing in on levels that we've seen, which is right about the midway point between a +1 and a +2. standard deviation. You could see that back in here, we're seeing that same level now. And yes, then I'll go down to the slow stochastic. I'd like to see it start to give me the green signal. You see that transition from red to green? Because I can't see anymore. Really, my vision is just awful. That color change is really important for me. So I'm not a big fan of an arrow or a symbol down there because I really want to see the way in which, one, has it got to the 20? It has not. And two, are we seeing the cross? And then if I change the color, it's just really easy for me to see. So it's not just about being below 20 or just being above 80. We want to see the way those two moving lines interact with one another. That's really your signal. Okay. So having said that, stochastic not yet, V-score yes, Darvis yes, call it 514.20 to 514 even. That's the zone. Your next Darvis level down, however, sitting at about 500, 501. Okay. All right. So moving on. Bill says no more Clarida. Yeah, apparently Clarida has done all the trading that he wants to do as a member of the Federal Reserve, and he's stepping down. So his trading career, he's my gosh. Yeah, exactly, Bill. All right. Christian asks, what happens if I sell a put spread against a falling stock and it continues to fall, but eventually does not reach my spread range? Will I have any margin issues or other challenges? So, Christian, I always recommend when you have a question about margin, and I would always just contact your broker. I mean, there's a squiggly little line between, I don't know all the levels. I don't know what you paid. There's just not enough for me to work with there. So I'll always say, contact your broker. Just ask them that question. But as a general rule, if you sold a put credit spread, think about what it is that you need the stock or the underlying instrument to do. And, if you're selling puts, even if you've got the protective put below that, put credit spread, a falling market, of course, is not exactly what you want to see. My advice as a trader, not any comment on the margin or anything. My advice as a trader is, where is your trade no longer valid? Not knowing the symbol or the cost or anything. I'm just having to give you some general advice, but this is really important. Where is your trade no longer valid? It can't be max debit, obviously, and it shouldn't ever be, quite frankly. So you ask yourself, if I sold something and I expected support to hold, when that support broke, is there still validity for me to hold on to the trade? Or what is my premium risk threshold? So that's what I would say in terms of advice. Always contact your broker. Again, not knowing the numbers, I got to give some vague advice there. All right. What exactly is the difference between trading Goog and Goog L? I mean, for a trader, really nothing. It's really more of an investing situation, Jane. So, it's just the difference between what you're getting in terms of, from an investor standpoint, the difference between Goog and Google. In terms of, from a trader standpoint, there's a slightly different weighting. It's really usually negligible. You'll usually see Google weighted in the alphabet as a pair, weighted within the XL, Y pretty evenly. Within the XLC pretty evenly, within the QQQs pretty evenly, within the S&P pretty evenly. Their weighting is pretty even. But really, the only difference is if you're investing, if you're holding this longer term. For a trader, very little. Keep an eye on the structure. Sometimes they do have minute differences in structure, but most of the time there's almost no difference at the trading level at all. Just keep an eye on the weighting, and most of the time, like I said, they're within a few tenths of one another in terms of their weighting within the sectors, within the ETFs. All right, so moving on to low on the daily chart. I like low. I mean, look, we've been double green, went sideways for a little while, double green, going sideways again. Darvis is helping out. I like that 242.10, 242.20 area, even, about 242.30 area. And it's a buy. It's buyable. Just remember kind of a little bit about weighting. I mean, we were talking about that earlier with the weighting in terms of Goog and Google with Jane's question. Remember the weighting. Think about where Lowe's is weighted. And then, really the simple question to ask yourself is this a relative outperformer? Is this an outperformer or not? A lot of times traders will look at relative outperformance, but they're looking at disparate parts of the market. The markets are much more connected now because of sector ETFs than ever, because of indices than ever. So you want to compare like to like, unless you're looking at, say, a sector rotation conversation when you're looking at, all the different sectors lined up in terms of their relative performance. But at the stock level, you really want to look at the individual boats. That's the way I look at it. The boats, which are the stocks, in the same tide, right? So with low, I would say, yeah, on face value, good looking potential long setup off the Darvis sitting at about, like I said, you can go as high as, say, even 242.5 is fine, quite frankly. So I do like a buy there. And I wouldn't quite call that an oversold buy. I would just call that just a deeper retracement within the context of what we have to consider is still a dominant overall uptrend. All right. We take a look at Apple. I like Apple. I talked about Apple last Friday. Yeah, I'm with you on Apple. We talked about Apple in Friday's video, and I said, look, you look at QQQ or at NASDAQ futures, and you go to XLK, the number one weighted sector, and then this is how relative outperformance reveals what truly is still in an uptrend. Can we still buy the dip? When we still have an overall uptrend in the market, we absolutely can. It's just that the buyable dips, meaning the trends that are still moving higher, that is an ever receding pool of symbols, unfortunately, because the overall indices and many of the sectors are in chop. When that happens, that's going to affect the individual stocks. But there are some stocks that are saying, what chop? And that is what a buy the dip looks like. So yeah, I do like Apple. And if you wanted the analysis the way I saw it on Friday, head on back to the Simpler Trading YouTube channel, and you'll see my Friday update where we talked about NASDAQ to XLK to Apple. Crispest, Michael, yeah, I can't seem to spit that out. Crispest, yeah. All right, my opinion on Johnson & Johnson, please. Of course, it's a player in the Dow. It's a player in the XLV. All my cards on the table. I'm long XLV. Johnson & Johnson's a double green uptrend north of the 200 propulsion. That's a buy the dip, my friend. Again, if anyone's out there saying you can't buy the dip, they don't know what they're talking about. Are there places you can buy pullbacks and retracements? Absolutely. It's just fewer of them as opposed to 2021 or even 2020. So good looking trend. I like that one a lot. It should help the Dow, that type of trend. It should help the XLV, that type of trend. And overall, if you can get a dip to even the 21 propulsion, that's a 21 exponential too. If you're using that tool, call it 170, 169.80. Good zone for that initially. H, how are you? I've entered into this trading world recently with an investor's mindset. And it wasn't only until a week ago. I have a mess on my hands right now that I need help cleaning up. I can help a little bit, but I'll do what I can. I sold a 570 put on Netflix. Okay. That expires on Jan 22. That is deep in the money. I have a vague idea that I probably should roll it. Again, when it comes to margin issues and stuff, I have to say, again, talk with your broker, but you sold a 570 put. Okay. Anything I'm going to say is not going to be super helpful right now. Here's what I will always say, and I don't know at what point, again, everybody out there, gang, there's a reason I stopped calling stop losses because they're so suggestible. They sort of have a randomness to it. What was the point of validity for that trade? Every trade, unless something dramatic like a gigantic gap happens, right? This was a pretty steady trickle down, except for the move from Jan 5 to Jan 6, okay? And I know that may not help for this particular issue, but I want to see this proliferate through your account. Where was your stop loss? What is your point of control? I do not roll trades. I think that's a really huge denial type approach. If you're wrong, you're wrong. Take the paper cut, move on. Here's a really good rule that I have. Am I risking more than 5 to 7% of my account? You never want to risk ruin with any single trade. right? So what is your point of validity for the trade? If you've exceeded that, get out. Take the loss, find a place where the market's not in a downtrend. Look, selling puts in downtrends, not a good idea generally. Selling puts below the 200 propulsion, not a good idea. I don't think, again, depending on what you sold it for, I don't know where you are in terms of risk, but please know where that stop loss is. Contact your broker if you have any questions about that type of thing. But um, as far as cleanup goes, you know, you have to find another trade, right? There's no such thing as cleaning up. I don't want to keep having you add to this trade. I do believe there's a lot of wisdom in knowing what your risk is when you get in, having a finite threshold of where you will accept risk no further than a certain percentage of your account. And when you get there, accept it and move on because you can always find another setup. You can always find another trade. And again, if you're still in an allowable amount of risk, let me give you something a little bit more tactical now. Okay. I've done my PSA, which I think is the responsible thing to do. If we can trade above 544, you will have put in a minor low here, and you could see a retracement. So if we can put in a minor low, we start trading above the Jan 10 high, you could see some follow through to the upside. I'm not saying you're going to get back up. You could see if we complete that. So you're kind of in a time crunch, right? You could see 573. If we complete the minor low, you could see 573. That'd be the 50% of this current range. That's the way I would look at that from a trader. Again, putting the 570 put that you sold aside, what is happening now? We have the potential for a minor low. We need to take out the high from Jan 10. And then I think the upside target would be 573 and change. So I hope that helps. And that's just everybody. That's just everybody. When you put a trade on, again, I never roll over. Ooh, I'm running over. I never roll over. I know what my risk is. When I hit it, take the paper cut and go. All right, gang. Be good to each other. Be good to each other. I'll talk with you soon. I'll see you tomorrow.